in these sessions, what currency pairs are going to work best, right? This is really important too. So first we have the major currencies, which are your, like, your USD pairs, your euro pairs, your pound pairs. These are your major currencies, right? Now, when you look at the spreads on these major currencies, they're relatively low than all the other minor currencies here, which are like your euro against the pound, euro against the yen, AUD versus New Zealand, and so on and so forth, right? This is important in a way for you to understand that, okay, which pairs are going to have the most volatility, or which pairs are going to be the easiest to trade in different sessions. Now, one thing really important to note is how are currencies correlated in different sessions. This is also extremely important. Now, when you're talking about the Asian session, what you're going to find is now in the Asian, you have the yen that's open, you have Australian dollar, New Zealand dollar, and then you have some sort of movement in gold as well, right? So now, when we talk about, okay, let's say someone says, hey, Raja, what I'm going to do is I'm going to trade GBP USD in the Asian session. So let's logically think about it. Is the pound open in Asian? And the answer is going to be no. And then you say, okay, is the USD open in Asian? And the answer is still going to be no. So it makes no sense to look at GBP USD or GBP CAD to trade in the Asian, right? Because you need to look at the pairs that are actually open in that session. Let's say we have your, where's my marker over here? Let's say we have your USD JPY. Let me just write down over here. Let's say you have USD JPY, you have GBP JPY, and then you have Euro JPY, right? So now this will be sort of interesting here for some people. Now, when you're looking at USD JPY in the Asian, you're going to notice that there's only JPY that's open in USD JPY, there's only JPY that's open in GBP JPY, and there's only JPY open in Euro JPY. So in the Asian session, you might find that all the JPY pairs, they tend to move the same way, right? If you're going to say that, okay, in the Asian, what's going to happen is that your JPY is going to move bullish. So if you backtest, if you look at the charts, you're going to notice that with your JPY, GBP JPY also moved up. USD JPY also moved up. CHF JPY also moved up, because they all are open in this, like only one currency is open in the Asian session, right? If you look at, let's say, AUD JPY, what you might find is that maybe AUD JPY, it may not move as these two pairs move. And the reason why is because in AUD JPY, both AUD is open and JPY is also open, right? So now you have a fight between two currencies. So whenever you're looking at a market session, you're always looking at that, okay, I want to choose a pair that's only influenced by just one currency, which is why, like, my main objective in the Asian session is to only focus on either the pound yen, the euro yen, or the USD yen, because I know that from these pairs, it's only influenced by just one currency. I'm not going to look at AUD JPY because I know that, okay, in the Asian session, AUD JPY is influenced by the Australian dollar and the Japanese yen, so it would make no sense, right? So now if we move along to the next session, next we're going to talk about is going to be the London session, right? So when you talk about London, you're talking about the pound, you're talking about the euro, you're talking about the Swiss, and you're talking about gold as well. So the same thing applies in the London session here. Now, one most important thing is that currencies have both strengths and weaknesses, right? And the easiest way to identify strength and weakness is just by looking at the chart and see what the correlations are. So we're going to talk about that later on there as well. But what I really want to emphasize is on the fact that, okay, let's say you choose GBP, Euro GBP, right? Let's say someone says here, let's say we have Steven, right? And Steven says, hey guys, you know what I'm going to do? I'm going to trade Euro GBP, right? So when Steven is going to try to trade Euro GBP, he will have to make sure that for him to have a profitable trade on Euro GBP, he would want one pair, like one currency to be really weak and one to be really, really strong, right? That's the only way you're going to know that, okay, now the pair is going to move. But if both currencies are strong, then there's a very, very high chance there's going to be some sort of consolidation. Then it's going to get really hard to trade, right? So for someone like, let's say myself, if I was a new trader and if I chose the London session to trade, I would maybe go ahead to focus on maybe GBP USD or GBP JPY, Euro JPY, Euro USD. I would want to choose a pair which is only influenced by just one currency. It just makes sense in that aspect, right? So now when we move along to the New York session, now you have an entire stable of currencies that are open. You have the USD is open, you have CAD is open, you have pound is open, you have Swiss and gold, right? Now gold is mostly moved based on the Australian dollar, because with the Australian dollar, gold is directly correlated. I don't expect anyone to use this information based on their trading because it's a little bit of an advanced concept. You have gold is also influenced by the US dollar. Gold is also influenced by the yen because they're both safe havens. Now, when you talk about the New York session, one mistake I see people make is that they will say, okay, I'm